You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology for credit unions, and we like to talk, hopefully, about financial technology for credit unions, and usually I think we manage to hold it to that with new content here on the Big Cast, usually pretty much every Tuesday. Got a little bit of a different episode this week. There's been so much going on in the news around the payments and fintech space that we're going to be focusing mostly on current events and kind of our take and give you some resources to follow up in that area. But we're also going to be touching on what seems to be our favorite topic here these days, ChatGPT and generative AI in general. And we've got perspectives from a couple of credit union CEOs who joined our town hall meeting last week to share how they are using Gen AI within their own organizations. So those will be a couple of insights that we'll add into the mix a little bit later. Until then, I'll just mention that you can always find out more about the Best Innovation Group by visiting our website, big-fintech.com. And as I said, you'll find more information about the Big Cast there as well. If you click on the media tab, you'll find our past episodes. A couple of them are going to come up in this conversation, so we'll link to those as well. First order of business, I'll mention, FedNow went live about 10, 11 days ago from the time that you'll be listening to this. Went live on July 20th, and to be honest, it kind of snuck up on me. I knew the date was coming, that they said they were going to be going live in the latter part of July. And then when I suddenly thought, we're here, I'd been out of town a little bit, so I hadn't been following along quite as closely. So I thought I'd just look around, and boom, I found out that it was going live about 36 hours after I'd heard about it, which, at first didn't surprise me too much because I kind of always thought that the actual declaration of a live event, going officially launch out of the pilot, would be pretty much a non-event because, this is going to be a slow ramp over time. Generally, I think that was what happened. I think that we can safely say the world didn't tilt on its axis. The entire payments industry did not totally get upended overnight on July 20th. But what did happen that I did not expect was a surprising amount of media coverage from the likes of CNN. I'm trying to recall where the other places where I saw some fairly extensive coverage about the whole idea that there's this whole new set of real-time payment rails that are out there in the wild and what it's going to mean for people. It's going to take a long time, and it's interesting because the real audience, I think, that the Fed and all the other users really need to reach first is not the end users. And if they do, it's probably business end users. But more importantly, really getting to the banks and credit unions and service providers and merchants that are actually going to make this stuff happen. So I think that's going to be the next step. I think kudos really are very much deserved from the Fed. They said they were going to get this out. They actually went to the earlier stage of the 4-year initiative of how long they said it was going to roll out. And they got it out there. They have announced that they went live with 35 financial institutions, of which 7 of them are credit unions. And there's, I should say, 7 are natural person credit unions. I've never understood that. I understand the term. It just always sounds weird to me. There's also 4 corporate credit unions that are live. So that's their opening salvo in terms of the network that's out there. Obviously, you need senders, you need receivers to actually make this stuff work. By comparison, RTP, which happens to stand for real-time payments, which is what FedNow is obviously doing as well, that's been offered by the Clearinghouse, and that's actually been in market already since late 2017. And I think they're making sure at the Clearinghouse that they're not forgotten in the middle of all this. They actually put out a couple of announcements over the course of the last couple of weeks as well. They just recently surpassed the 500 million transaction mark cumulatively since they went live in late 2017. Not an enormous number, but a number that continues to grow. They also, compared to where the Fed is at with their 35, have announced that they have 360 financial institutions that are actually live on their network, including a bunch of big ones. Because then one of the things that they tout is that they do have theoretical connectivity to two-thirds of the DDAs, the checking accounts in existence in the U.S. because of the fact that they have the largest banks signed up, because those largest banks are part owners of the clearinghouse, operators of RTP. I also have it on good authority that the RTP system has north of 70 credit unions signed up on their network as well. So, it's a catch-up game right now for the Fed, but the whole idea of why they got involved was for that long tail. All credit unions and banks are welcome to join the clearinghouse's RTP network, but the belief is, I think, that some of the smaller ones, particularly on the community bank and credit union side, may be more comfortable not relying on their largest competitors to provide some critical infrastructure. Next part of this process is certainly going to be building out that network, so I'm sure we'll be watching it. It's not something that's going to change the world overnight, but I think if you take a look at what's happened in other parts of the world, there's certainly something that's going to be going on here. So something to watch out for. Something to watch out for probably a lot sooner than that would be the Credit Card Competition Act, and we've talked about that before here on the Bigcast. It is still out there. That is the attempt to regulate credit card interchange, similar to the well-known Dodd-Frank Act and the Durbin Amendment that came out of the last financial crisis that affected debit card interchange. The latest one, the CCCA, as it's abbreviated, has been bouncing around Congress. It was introduced earlier this year. The current, I'd say, concern, the belief is that there is a possibility it will get tucked into a defense spending authorization bill, which would be, a kind of a backdoor, which frankly is the way that the Durbin Amendment and the Durbin Amendment got in kind of at the last minute as well, through a process that was quite similar to that. We'll see if that actually happens. That seems to be a tactic that there's been a lot of conversation that may be getting used in a couple of different avenues to try to move things through, and I'm wondering how that actually is going to play out. Here's the part that I find the most interesting. Obviously this is a very contentious issue with the retailers lined up on one side and the banks and card providers lined up on the other side. There's an article last week in Digital Transaction magazine that pointed out that, let me see if I can see the exact headline. The CCCA won't harm issuers' ability to fund rewards cards. One of the things that comes up quite a bit is, this is a fairly arcane topic. How do you get people excited? Well, the retailers are going after it with statements along the lines. This was one that came out recently too. There is $15 billion of annual interchange savings available through this act for merchants and consumers. Okay, I guess that's probably factually accurate, but the part that I find kind of interesting is merchants and consumers. I think you can kind of end that statement at merchants, because based on all historical patterns of what's happened in other cases, consumers didn't get any of it. It all went to the merchants. So if you're trying to enlist the consumers in this argument, that's a little disingenuous in my mind. The other piece of it that I didn't think was actually, I was kind of waiting to see when this was going to get onto the table, the ever popular rewards programs the credit cards offer, in terms of whether it's cash back or airline miles or whatever else you're getting every time you swipe your card or dip your card or whatever you do with your card these days. And I think if word gets out that rewards will wind up going away, which is what happened to debit card rewards back after the Durbin Amendment, I think consumer sentiment may swing a bit. And that's where I thought it was interesting that this Digital Transaction article, which was actually quoting a press release from the Merchant Payments Coalition, which is a lobbying group on behalf of retailers, that they're claiming, they're trying to get ahead of this. Obviously, they think that concern is starting to float around out there. They say, okay, no, we've done our research. There's enough money out there to still fund rewards cards. Well, it's interesting. One of my favorite things I talk about a lot, and there's such a shortage of, is intellectual honesty. They commit. Well, I shouldn't say. It doesn't say it flat out. I have got to believe that this lobbying group funded research. I'm not even going to bother mentioning the name of the research company. It's not one of the ones I've dealt with. In fact, I wasn't familiar with them. It's actually UK based. It's not disclosed anyplace in there, but I've got to believe that this research was done with funding from the retailer side of the shop. But some of the things that are in there just don't hold up to anything resembling what I would call a smell test. Like there's one chart that shows basically the amount of money that is available is still, even after this, there's plenty of money left to fund these rewards. And then what they do is they show a chart of how much reward expenditures and then how much net income on interchange is what they call it. And this is based on the reported numbers. They say that 6 of the top 10 credit card issuers publicly report this information. Okay. They seem to be, and there's no way that they're this sloppy in their research. This is clearly an attempt to try to confuse people. They point out that 72%, I'm sorry, no, that's the wrong number here. 70% of overall interchange revenue is rewards expenditures. They then say that leaves you with a margin, a net margin on interchange income of 30%. So they're saying that there's a 30% margin on interchange income. And then they come back and say, by comparison, the general retail industry has an average net margin of 2.3%. Wow, 15 times higher for the credit card company. Oddly, what seems to be missing in this analysis is that the belief is that basically every penny that's earned through interchange is just pure profit. There's no mention of fraud. There's no mention of loan losses. There's no mention of labor. Why is there only a 2.3% margin? Because in the retail industry? Because they pay people to actually work at shops. There are people working at credit card companies that actually have some. So they're comparing apples and oranges. Yeah, I've said this before. I do believe there is an argument to be made that interchange is too high. I do think, again, I'm coming back to this point of intellectual honesty. Okay, I think there's an argument to be had there. I also think Visa's CEO is making a bad argument recently when he is going back to complaining about surcharging. That battle's been lost in the courts. And frankly, if you're going to set interchange rates, then what's wrong with somebody saying, guess what? If you're going to make me pay that, then I'm going to pass along that cost. That seems like fair game to me. I don't know. But on the other hand, this supposed research that's being put out there, I'm going to post some links. You can take a look at what I'm talking about. And if you want to go back and see where some of this is coming from in terms of the names of companies, that's up to you. But again, it's an aggravating thing in my mind, and it's something to be watching for closely. I know the CUNA's been looking at this as well. They've got a website up to try to enlist people's support to make sure that this disinformation doesn't wind up creating a negative result. So I'll post those links as well, and we'll be watching along with the Credit Card Competition Act, as they call it. One of the other big headlines this last week, X.com. I was kind of depressed this morning when I was kind of wondering, I thought it was going to happen eventually. And sure enough, just this morning, the icon on the phone for my Twitter app suddenly just is an X, a black and white X. The bird is gone. I knew the bird was going away, but I thought I was going to have to reload the app or something before it literally vanished off the front page of my phone. No, it's gone now. And this is all around Elon Musk's pursuit of what most people now are calling an everything app. I used to think of it more as a super app, was the way I'd heard it called before. And this goes all the way back to his days when he sold an earlier company, which again was called X.com, to PayPal, and then kind of got out of the mix. But obviously this has always been on his mind. And there's been a fair bit of press about this lately. He seems to be thinking of WeChat as his model in China, of the type of app that basically runs kind of the operating system for your everyday life, is the way people have kind of put it, where, social media, yep. Banking, yep. Purchases online, yep. Hailing a rideshare, yep. It's all there. Your news feed, everything in one place. There's a lot of reasons why a lot of people have gone after this and have not succeeded yet. And I think, one of them is, especially from the financial side, the fact that, and this is why there's so many differences in the American system, the 9,000 financial institutions, banks and credit unions that we have, that you've somehow got to manage to navigate to make all this stuff work. The other one is, quite frankly, that we talk about all the time with financial services, is trust. And given where we're at right now with Twitter and Elon Musk's personal brand, and I've seen a lot of comments about this online, is he the guy, especially the way he is basically inextricably linked and heavily tied into everything going on at X.com, is he the guy that you want to trust with all your financial information? One thought I had that, I mean, I'm not sure why this hasn't come up anyplace else. If he really wanted to do this, if you want to really leverage a brand that has a very, very devoted following and a great reputation for, for quality for the most part, why wouldn't he put it under Tesla? I mean, okay, it's not an app, but it is an interconnected device. It seems to me that that would be the place that you'd actually want to try to build your everything app. But regardless of that, that's not the approach he's taking. But I am going to say something. I mean, I tend to be, especially lately, kind of down on Elon Musk. I got to give him credit for putting his money where his mouth is on this one, because one of the things we talk about a lot in Silicon Valley is this whole notion of move fast and break things. And this comes up a lot. And when you're the incumbent, it's very, very difficult sometimes to innovate because it's so scary to take your base business and put it at risk, to take the chance to try to do something different. Well, Elon Musk is doing that. He's putting his base business at risk. Now, you could argue maybe he didn't have any sentimental attachment to it because he had just bought it. But he's got 44 billion reasons why he probably wouldn't want to be doing extensive damage to the Twitter that he bought. And it's pretty clearly getting damaged. I mean, ad revenue, he's acknowledged, is down by 50%. I think it's clear that traffic is down. I mean, quality is down. And there's, all kinds of issues that he has to deal with there. So we're going to see, he's clearly succeeding on the breaking things part. He's moving fast. Let's see if he can come out on the other end and actually deliver on some of the things he wants to do. One more thing before we get to our ChatGPT piece. I'm surprised at how much kind of feedback we got from a couple of weeks ago of our movie review of The Bank of Dave, which I mentioned has a lot of credit union similarities to it. It's a movie that came out in the UK about a little over a year ago, I think. No, maybe not even that long, but has not formally been released in the US. It's available on Netflix UK, but not on the US networks, or the US instance of Netflix. I have discovered, since we did that last review of it, that there is a limited release coming up in the United States, in theaters apparently, I'm sure quite limited, on August 25th. What that means to me is it probably says that Netflix, who presumably own the right, I think they actually funded part of this film, will probably make it available on Netflix US at that point. So we'll probably be revisiting that. Again, I think it's a movie that I wouldn't call it an amazingly good movie, but it was a solid movie that really kind of ties into, to me, the people helping people financial services message. So you can get some good kind of rom-com entertainment at the same time as thinking about banking. If you can bring the two of those together, that's okay by me. Okay, so back onto the ChatGPT, as I mentioned, and a chance again to plug the Credit Union Town Hall that now takes place monthly, hosted by our Grand Poobah John Best, along with Mike Lawson of CU Broadcast. I believe the next one is going to be they're always on Wednesdays. I believe Wednesday, August 23rd is the next one. But this past Wednesday, the conversation was again about how credit unions are using ChatGPT. If you go to cutownhall.com, ask for an invitation, and we'll get you on the list. There's no cost to join us, but you do need to register in advance. Also, if you go there, you'll be able to listen to the entire replay of the last episode. But we're going to just play a couple of excerpts from that one as well. The conversation got into how credit unions these days are using ChatGPT. Also a chance for a shameless plug. We at the Best Innovation Group are trying to gather that data anonymously. There's no client data whatsoever. This is more of a how is your credit union thinking about generative AI? How do you plan to use it? How are you using it today? What kind of guardrails have you put in place? We're trying to put that information together. It can be submitted anonymously if you don't even want to name your credit union, although it's better if you do. We'll be bringing that all together, packaging it, and sharing it with the group. That's a little bit of what actually wound up happening on this week's town hall. So John was talking about that basic idea. He actually wound up getting into a specific situation around where ChatGPT has had what they call hallucinations and reporting incorrect information. And that gets us to basically where we jumped in about the way a couple of credit union CEOs are using it today. Australia Hoover is the CEO of the CDC Federal Credit Union, just down the street from me here in Atlanta. So he talked a bit about how he's been using it already. And then the second voice you're going to hear is Andy Kempf, who is the CEO of Forefront Credit Union in Michigan. So have a listen here, and then we'll come back and just say a few more things.
The idea is this: what should be the credit union policy with regard to these sites? Now, keep in mind, there's not just this site. So I was fortunate enough, Australia engaged with us with respect to our survey. And Australia, I hope you don't mind me talking about this. This is kind of our open forum, but you said that you prefer Bard over Bard being the ChatGPT, basically Google's version of AI, which, by the way, they released the original Transformer service. So Google itself is definitely, one of the originators of this Transformer large language model technology that's giving us this big boost. And so, Australia, you had mentioned, do you mind just sharing why you chose Bard over, say, ChatGPT or Bing or any of the other platforms, if you don't mind?
I mean, sure. I don't think a whole lot of thought went into it other than my gut. And because OpenAI and ChatGPT essentially was such a new entrant into the marketplace, I just wasn't personally comfortable, and certainly not in the business context or at my credit union. I just did not have that level of comfort that there was enough time to know how data would be treated and secured and that sort of thing. But at least with respect to Google, there have been more, I guess, challenges, or there's more precedent from Google's standpoint on how to secure data. On a personal level, I've got pretty much every Google smart device that there is. So I just had a personal comfort level with Google, and it's had more of a tried and true tested strategy around security. And so that was as simple as that. So it's really nothing against ChatGPT, but I just had a personal sense that Google may have had a bit more robustness and thought behind how to protect and secure data.
I totally see your point. It's kind of like nobody ever got fired for buying IBM, right? That used to be the old saying that we had in the industry.
And we do not have any formal policy around the usage of AI tools inside of our credit union. And so I have kind of dipped my toe into the waters and have found personal business uses for Bard. Some of the correspondence that I write, like the introduction to the employee newsletter every month, I'll have an idea and I'll ask Bard to create the outline for the topic that I'm going to discuss. And then, of course, I'll go through and edit and make adjustments to it. But it's a great starting point for things like that. I can imagine at some point that any written correspondence that goes to our membership should be somehow maybe could be automated through some type of AI tool. Because, let's face it, we hire people who we think are great at everything, but perhaps written communication is not their strongest suit. And so instead of correspondence going out that contains errors, I could see AI certainly being useful in that context.
Today, we're finishing up a policy, and it goes a lot along with what Australia was saying, close to it. But acceptable use is that we can use it, but no forefront messaging, no forefront data input, no uploading of any information whatsoever is to go in there. We're evaluating whether we can use questions on it, because we're still not fully cognizant on if you ask a question, does that get uploaded into the system for learning or not? So can it lead into somebody learning what Forefront is asking about? That may end up
compromising
potential corporate initiatives that we may have. And so we're evaluating that as well. We're looking at a DLP type thing for limiting uploading, but we need to have the download. We need to be able to use it because we have routinely, many of us around here that play with it have discovered that what would take us an hour and a half to write, we can get the guts of the project, the guts of what we want to put together done in about 3 seconds, and then finish the rest of it all in 15 minutes and be done, and off we go. So it's something that we're playing with, but it's something that we definitely put a policy in place that it'll be approved by the board next month, but a policy that we put in place that people cannot upload anything.
So I thought it was interesting. That was Andy Kempf again at the end, the second voice you heard weighing in on how Forefront is going forward in terms of developing policies, in terms of how their credit union is using, and I can't remember if in their case if it was ChatGPT, but generative AI in general, and clearly Australia talking about using Bard as opposed to ChatGPT. But both seem to see the value, but right now are focusing efforts on behind the scenes, nothing that goes directly to consumers and members, and certainly not going directly to members without additional review, which I have to believe that for the quite foreseeable future will certainly be the case. But again, shows that there is interest in this topic. With that, another episode of The Big Cast in the books. Again, my name is Glenn Sarvati, and you can track me down through my company, 154 Advisors. Find me on x.com, I guess, at 154 Advisors, or you can find me on LinkedIn or at the Best Innovation Group website. We've got the comments open at the bottom of all these episodes. Just check out the media tab at big-fintech.com. You'll find a plethora of past episodes of the Big Cast, well over 500 at this point. And you'll also find the show notes to links of, I think, helpful resources of things that we've talked about here on this show. If you are so inclined, we'd love it if you'd subscribe to the podcast as well. That way you can be reminded. You can always pick it up wherever you get your podcasts, Apple Music, Spotify, etc. Or just visit the website. We've always got the new ones posted out there. You can find the Best Innovation Group on x.com. At Big FinTech, you can find our grand poobah, John Best, at JB FinTech. You find them both as well on LinkedIn. We'll be back next week. We've got a couple of interviews, and we're starting to get revved up for what is looking, as usual, to be a very busy fall FinTech conference season. So we'll be sharing some of those initial thoughts with you there. Until then, as always, watch out for the CCCA, watch out for FedNow, see how that's progressing. Keep us posted in terms of the way you're thinking about ChatGPT or anything else. And as always, thanks for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.